Yeah, let's look into the very basics of ethics. Typically, the best way I suggest for preparing ethics is read through the examples. There are so many examples that are given in the textbook as well as the questions at the end of the book also. And the easiest way to prepare is not by reading through this concept, because this concept is always a tricky and a confusing stuff, right? Because at the end it is nothing but good practices, right? Or probably what as a CFA we should do, what we should not do. So I mean the questions that would be framed are like basic caselets. So this is a particular situation. So did he violate the standard, or did he not violate the standard? So from that standpoint, probably if I read through, let's say, 100 odd examples that are given in the book, that is sufficient for me to answer any kind of a question, because in what case the theory for it will never be that strong unless you are a law oriented person. Just by reading the theory, it's not easy for you to make out the entire clause. So the best way is always to practice through the examples itself. There is no point in reading through the theory part, whatever is that basic that is required, that I am covering through. But the best thing is always to take through a few examples and work that out. When it comes to the ethics or standards, the CFA Institute has specified that as a part of its bylaws. When the institute itself has set up, there are a lot of the code of ethics as well as the standards of professional conduct that have been mentioned as a part of the bylaws of the organization. And to protect those interests, there is a disciplinary review committee they have formed, who is responsible for enforcement of all this code of conduct, both at a prospect CFA level as well as already a qualified CFA level or charter holder level. So it is applicable across all the layers, and it is more talking about in case there is any kind of a violation, there is a designated officer. The institute will designate the officer who would be doing an inquiry, and so the person who got affected by it, either he can do a self disclosure that whatever has happened, and it could be through some kind of written complaint. Let's say let's say both of us are following the CFA code, or falling under the CFA code of conduct, and you feel that I am violating the code of conduct in the sense that I am giving more favorable opinion to some of the clients and I am giving a negative opinion to some of the clients. So just to make the others more benefited, probably my high profile client, I am showing more favor compared to my low profile clients in a slightly different way. I will show you. You can still differentiate between your high profile and low profile clients, or highly paid versus low paid clients. You can still show a differentiation, but it is not like the one is at a disadvantage compared to the other. So if at all you notice that such kind of violation exists, even you can write to the CFA Institute about the way I am behaving with the client, which is as a part of violation of one of the code of ethics or professional conduct. And if at all the institute comes to know about it, then there is a kind of an inquiry. Either you can either the affected party can disclose what has actually happened, or it could be even through the outsiders also. So at the end, if the institute finds that something is violated, it can result in either the no disciplinary sanction happening, which means fine, this guy is acquitted, there is no problem with this person, or there could be a cautionary letter, or it could be a disciplinary action also. Disciplinary action could even result in the final removing from the CFA program and removing your designation, the charter, whatever it is. The extreme case is that. But before that, there is a kind of, if at all any disciplinary action comes up, the member can either accept or reject it. So if the member is accepting it, then fine, the CFA Institute can directly take a decision. But if you challenge that decision, then again there is one more hearing which is from a panel representing the CFA institute members, and even in that, if it is found that this person had actually made a mistake, it could result in even in suspension of the program or even use of the CFA charter. All these things are very much possible. And one of the experience which we have with one of our candidates also earlier was he has written something on the hall ticket, intentionally or unintentionally, whatever it was, and when the result was declared, it was shown as withheld, and he was not even allowed to attempt the next few exams, and there is some kind of hearing that is still going on. So, I mean, probably our typical mechanism is we write something, we erase it off, but the hall ticket also needs to be submitted. Almost all our documents have to be given at the time of submission of the paper, and based on that, the CFA Institute has come out and started a inquiry into his actions. So these kind of things also we need to be careful of, not only just at the exam level, but also in the way we perform the duties. So that is where a professional conduct is designed with 7 major headings, and that's what constitutes this entire chapter. Yeah. Now, what all needs to be done as a part of our code of ethics? Looks like very generic words. So you have to act with integrity, competence. Some of these words are explained in your coming slide. The diligence that you have to show to your customers as well as to your employers, or in any kind of a decision making or investment reports which you are preparing, the kind of research you have to do before you give some kind of outcome, right? And in an ethical manner with all these public, clients, prospective clients, employers, employees, all these whosoever are involved in the capital markets profession. Now, couple of points where the questions could typically arise. You place the interest of the investment profession and client above the personal interest. Probably that's one more thing which we know as a part of a general tendency also. I have to first give more importance to my client compared to my own. It doesn't mean that I should not see. There is again a thin line of gap here. That's where these questions will address. Let's say you give an investment recommendation to your client, buy the shares of XYZ. You already hold the shares of XYZ with you, right? Probably if you are asking 100 of your clients to buy the shares, the share price will go up, and probably you can think of selling off your shares. I mean, if I am thinking of it purely from a personal interest, then I am doing something violation to my profession. But even if I look, if it looks from the client standpoint, even they are getting a benefit, because it's a prospect. The shares which I am informing my customers to buy is a kind of future prospectable prospect company. It is having a good future prospect, so that's the reason I am recommending this to my client. So there is always a thin line of difference between using it for a personal interest versus protecting the interest. So that's where the system talks about disclose your information. If you are having such kind of if you are recommending XYZ to your client, but you already hold the shares of XYZ, it's not that you should not have it, because you are also one more investor along with an advisor. So you are not doing a charity just by doing advice and not making money for yourself. So the mechanism simply says disclose. So these are the smaller set of activities that we have to be comfortable with as far as our so at the end it's a client priority which is more than our individual priority. But in case there is some kind of conflict of interest that comes, it's actually not a conflict of interest, it's more of disclosing everything to the client, especially if the client, if there is even a little chance that this could give rise to some kind of ambiguity, right? So you have to use reasonable care and exercise your judgment while conducting any investment analysis. Don't pick up the copy paste works from someone and give it as your own decisions and investment analysis. Any recommendations you are making, because you keep seeing a lot of recommendations around coming from multiple sources, it's not that you should not use them, but use them with a proper source, proper reference that you have taken it from somewhere. So these become the most important activities or aspects of the code of conduct. So any investment action you are taking, or any other professional activities you are taking up, make sure that they don't get into conflict with the investment decisions or with the profession of the investments itself. And of course, you have to practice all ethics, and you have to make all the people around you practice all the ethics. Very simple stuff. And you have to promote the integrity of the capital markets. In case there is some kind of violations or some kind of manipulations that are happening on the prices and all in the capital markets anywhere, and it is found that a CFA member is responsible for that, it can result in a big disciplinary action again. And so it's more about maintaining the competencies, upgrading your skills. These all things have to happen, because at the end the role of a CFA is to provide proper investment advisory to the clients and maintain the investment profession in high standards. So these are the 7 things that have been identified as the standards of professional conduct. 1, how should you behave as a more in professionalism? What are the things when we say integrity of capital markets? What are the various duties to your clients and employers? And what are the things you need to take care of when you are doing any analysis or recommendations? What if there is a conflict of interest? And the 7th one being regarding the examination. CFA exam, CFA institute members, what are the do's and don'ts associated with them? So coming to the professionalism, it is said the first thing is every person should have a good knowledge of law. Again, the law only from our investment profession perspective. Right? Investment profession perspective, all the laws that are applicable, any rules and regulations, any regarding any kind of associations. Let's say if I have to open a brokerage account, what is the legal process that is involved with it? Or if I want to open into a derivatives trading process for my clients, what are the legal aspects that are going behind it? So a good understanding on the legal aspects will actually be necessary thing, because whatever the decisions you are giving, they might be in conflict with that particular law. So that's where they say, even if this, so these all could be source of questions. In the event of a conflict, let's say CFA Institute has designed one set of laws and India as a country is having one more set of laws. Even the CFA Institute says, first follow the country specific laws. If there is a clash of law also, give more priority to the country specific, and if there is no country specific law, then come to the CFA laws. So again it has defined a kind of a hierarchy. So that's where it says follow the more stricter law. At the end, country is more at a higher level compared to one single profession. So if one particular country, so these could be turned into questions typically. So this country law talks about this, whereas the CFA Institute law is this. Now the investor has gone ahead and stuck to this. As a part of this, he violated, not violated. Those are the typical kind of questions that could. And don't associate yourself in any kind of violations, and at the same time completely disassociate from any kind of a violation. Right? Probably wherever some briberies and various other aspects in terms of investment recommendations come, if you think that it is violating the code of conduct, we stay away from it, because someone else can report to the institute, which could result in serious matters. And yeah, this is where know the laws and regulations in all the countries where your company is doing business. Because see, in some countries, probably the dividends are not subjected to some tax, whereas in some countries dividends are subjected to tax. And your investment decision should take those kind of processes and procedures also into consideration, right? Or the minimum setup that is required for an investment advisory firm could be different in each of the countries. So unless you understand the legal aspects behind each of them, you cannot get into the decision making process. So that is what is the knowledge of law that is expected as a part of professionalism. No violations, and always adhere to the most stricter rules. In case the country does not specify any specific law, then CFA laws become more and more valuable. And in case there is any kind of a conflict, inform your compliance department of the organization. Instead of directly dealing with it completely, involve with the compliance department or report it to your supervisor, boss. And you don't take any direct decision, because sometimes employer's interest have to be on a higher level compared to your personal interest. So you have to be acting carefully in this process. So keep everyone informed that this is in violation with this particular code of ethics of CFA profession. Then the second important thing as a part of professionalism is independence and objectivity. Any decision you are taking, let it be an independent decision and an objective decision. Objective is don't get biased with someone else, and you can't say you may or may not buy this share. Then you are not giving any kind of a firm decision. Objective is yes or no kind of stuff. Let it be very clear in terms of the decisions you are giving. That's more of objective. Independence is you are not influenced by someone. So that's where some of the important things that come up. Solicit, offer or accept any gift. Doesn't mean that you should not take any gifts. But see, generally people do come and give festival gifts, New Year gifts, those all. It's not that you cannot take those gifts, but any gift which will make you compromise on your investment decision, which means the gift which is having a very high value. Sometimes you would be given some big cars and all, and any such kind of a gift that will make you compromise on your decision and take a decision in favor of that person who has given you the gift, that is what is a violation. Now, typical birthday gifts and the New Year gifts and all, they are very common. That's not a big problem, right? So that's where it is saying, do not offer or accept or any kind of a gift, benefit or any additional compensation that will make you compromise in terms of your decision taking. See, sometimes when you have done a great work, you will be given some percentage of it. There is nothing wrong in that. That's a part of the business deal. So business deal should not be confused with the extra gift or anything extra you are getting just for compromising. See, sometimes when you have